If you're looking to get your first credit card and rebuild your credit, you may be wondering about the difference between secured and unsecured cards. In this video, we'll look at how these two types of cards work, their advantages and disadvantages, and help you decide which is better for your situation. Now let's start with explaining the key difference. With a secured card, you provide a refundable security deposit, usually $200 to $500, that acts as collateral on the account. The deposit amount becomes your credit limit. Unsecured cards don't require a deposit, so you get a credit line approved based on your credit worthiness. Now, secured cards are designed for people with limited credit history, like teens or newcomers to the U.S., or those looking to rebuild their credit. The deposit helps the issuer manage risk. Unsecured cards require good to excellent credit, typically FICO scores above 670. The biggest advantage of secured cards is that they're more readily available to folks with less than ideal credit or no prior credit accounts. This gives you a way to start building a positive payment history and access revolving credit. Now, after about a year of responsible use, many secured cards graduate to unsecured lines with higher limits. Unsecured cards offer better terms, like reward points, cashback, lower APRs, and sign-up bonuses. But remember, security deposits on security cards are fully refundable after closing the account in good standing. Now, one downside of secured cards is that some insurers don't report your activity to the major credit bureaus. Without this payment history being added to your credit report monthly, it's harder to build your score. So make sure your card reports to at least one bureau. With unsecured cards, you won't get approved without decent credit, but responsible use means higher limits over time. Plus, your payments are always reported to the bureaus, helping you build your score. Just beware, unsecured cards make it easier to overspend. Now here are a few examples to give you an idea of the credit scores needed for unsecured cards. If you have fair credit, a FICO around 640 may get store cards with higher APRs. If you have good credit, 670 or more FICO makes you eligible for major bank cards, and a 700 plus score qualifies you for premium reward cards with the best terms. So in summary, here are some best practices. If your credit needs repair or you're new to credit, start with a secured card. Make sure it reports to the credit bureaus. Use it responsibly, pay on time and in full each month. After a year, you can graduate to better unsecured cards. If you have good credit already, skip secured cards and choose an unsecured card matched to your spending habits. Seeking rewards, cashbacks, and look for the lowest APR in purchases and balance transfers. The most important thing is always paying your bill on time and keeping your credit utilization low each month. This raises your score quickly over time. But be patient, and you'll gain access to the top secured cards and their excellent perks and terms. We hope the video has helped explain the key differences between secured and unsecured credit cards. They serve different purposes, but both can be useful tools depending on your financial situation. Check your credit reports, shop around for the best offers, and use new plastic responsibly. Your credit score and your financial health will thank you. So to wrap up, here are some common questions about secured and unsecured credit cards. What's the easiest unsecured card to get approved for? Well, the easiest unsecured card to get approved for are usually student cards if you're enrolled in college, or secure cards that graduate to unsecured after responsible use. Retail store cards are also fairly easy to get with fair credit. How long does it take to upgrade from secured to unsecured? Most secured cards can upgrade to unsecured in about 12 months of on-time payments. Some issuers review accounts at 6 months. Keep your utilization low and don't miss payments. What credit score is needed for an unsecured card? Well, you can get basic unsecured cards with fair credit. FICO scores around 640. Now for premium reward cards, you'll need good to excellent credit, 670 FICO score or higher. The better your score, the better the terms. Should I close my secured card after upgrading? No, you generally don't need to close your secured card. Keeping it open and active helps your credit utilization ratio and total open accounts, both of which help build your score. Which is cheaper, secured or unsecured cards? Secured cards tend to have lower fees and interest rates since they are aimed at credit builders, but unsecured cards offer better rewards and cash back that offset costs. So focus on paying balances off. Does a secured card help build credit? Yes, if it reports to at least one credit bureau. Responsible use shows you can manage revolving credit and helps establish a history. Make sure your payments are reported for maximum score benefit. Now, do you want to learn a little bit more about choosing the right credit card? Get our free guide to comparing secured and unsecured cards and how to build your credit responsibly. Just visit personalmoneyteam.com for your free download. That's personalmoneyteam.com.